In this video, we're gonna break down Palo Alto chart and how you can strike it and strike for gold. That's right, but we're gonna use 3 different time frames. We're gonna use the daily, which is gonna show you about what the market sees. Like, cause most people stare at the chart and they see price, they see emotion, but I see memory. I see DNA, I see manipulation. So we're gonna use the daily, then we're gonna use the 4-hour, which is gonna give us a lot of structure, it's gonna show us a lot of detail. And then we're gonna use the hourly, which is gonna really give us entries. And I'm gonna show you exactly at the end of the video where I would strike at and what I saw. Now, every level is a conversation when you're looking at a chart, right? And so it's a conversation between fear and it's a conversation between greed. And you ever wonder why, dang, I got in this trade at the right price, but I got smacked. Or when you finally enter a play and it pulls back right after. That's not random. It's because the big boys are playing chess while you playing checkers. And today we're gonna flip that. So before we get into the video, man, make sure you like, make sure you subscribe, and make sure you leave in the chat because we're gonna really get busy right here, right? So right now we're looking at Palo Alto, PANW. We're looking at the daily chart, right? So what I always do is I go from daily to get an idea, and then I go to 4-hour to get in more clarity, and then I go to hourly to get that. This is gonna be a master class in entry, exit, and psychology, right? So first of all, I gotta ask you a question. When you see this, you like, Trap, this is macro psychology. So you like, Trap, what the hell is macro psychology? Let me break that down to you, right? The daily chart always represents the overall emotional architect of the market. So this shows you how the market feels emotion, right? And when you zoom out from the daily, you don't just see price. Let me say this, you don't just see price action, but you see human behavior, and you get to see this thing play out like a movie. So one of the things that I do when I'm on the chart, I like to build a story, because storytelling is how we really can knock it out the park when we're making these plays, right? And so I want to show you something. So currently right now the stock is at 192. Now you see me have a couple of little black lines right here. What we saw was it was at 208 right here, all-time high. And then it got real close to it right here on this candle where it hit 206. And then it dropped down, got close in that area again, hit 206. And then we got a big sell-off. Now it's important right here. Why did price fall? Why did it fail? Why does it have a clean break like that? And why do retail investors always get trapped right here, right? And so you didn't really read the story. A lot of people just chase one specific candle and they don't look at the overall story of what's going on. Y'all know my favorite saying when we're looking at the chart. Before you look right, you gotta look left, because when you look left, it's gonna tell you exactly how to move right. And so now we're gonna paint the picture. So again, we hit 208 right here, all-time high, we fall off. We build our way back up. But right here, if you notice, I have this right at 183 on your daily chart. And I want to do this right quick. Before we go any further, I need you to be looking at the chart with me, right? You see this can be a demand zone. Why? Why not here, Trap? Because you have a slight move here, but you have a bigger impulsive move right here, right? So people got a little confident right here off of this sell-off. So this here becomes a demand zone. And that's going to make sense at 183. Now we're getting into what's called candle psychology. Right? So if you look at this candle, you have an impulsive move, meaning you have a big move. So this is all right. These are all right moves. But here off this red candle, you have a big move up, and this move is the base for all of this. So from 183 to 208, 206 is the base, right? And so what I want us to understand is this becomes a demand zone. Now, Trap, what does that mean? All right, so a demand zone tells us specifically that this is where more demand is going to be. And so what I want to do is say, this is where buyers step in, smart money step in, but they got to come back here. When it comes back here, you're going to see a story taking place. For me, understanding supply and demand zones become essential for me. So 3 things that I really look at is market structure, supply and demand zones, support and resistance, right? Because I don't want us to get jammed up. I want us to understand the psychology of the game. So walk with me right here. So we have this candle here. Now, this candle becomes the demand zone. Why? Because it's the candle before the big impulsive move. Now, I'm going to tell y'all something. In the Patreon, we was in this play, right? But here's what we did. Once it hit this, and once this broke this structure right here, I said, it's time to get out, y'all. We got out of this play about right here, and we played it all the way down to here, to about 180 something. And then we got out, right? We got out at about, we got out about 188. So we played this. Well, Trap, how did you know to do that? My Patreon members, they was like, man, that was a good call, Trap. So what happened was, if you look right here, so you see this green right here, right? Right, this candle right here, coming off this spinning top, well, coming off this doji, I'll just call it that, right? Coming off because it's at the bottom of this becomes an impulse move up. So impulse is when the market goes up, it shoots up, right? This becomes an impulse move, right? So off of this impulse move, right, I didn't take the downside until it broke this level right here. Well, why did you take the downside when it broke that level right there, Trap? Because, watch this, off this high, you get a low, and then you get this, and then you get hit. So this is almost real close to hitting you a double top. Really, really close to it, right? Same vicinity. But what happens is, this large impulsive move is a lot of selling pressure. Right? So what happens to me is, and I understand this, if the selling pressure from here overtakes this one, that means the buyers have now stepped in and it has broken that previous structure of that candle, right? It has broken this. Now, some people can say, well, Trap, I'll wait till it gets to this low right here because of the doji. But once it broke that body, and I always say this to my people, because you look at this body and that body, those two candle bodies can coincide, but also if you come over, this candle body also coincides. So now we talking communication between the candles. That's important for us. Remember, before we can move right, we gotta look left. So we see this structure broken right here, right? Between those two candles and then this engulfing candle. So now that, to me, that's where the engulfing part really, really makes sense, because now this candle has engulfed the previous buyers. Think about it. This one candle has taken out 1, 2, 3, 4 candles, right? So now once he overtook that, I said, hey, let's get out of this play, right? Because the smart money doesn't panic. It moves with patience. And that's what we want to do. I don't want you to be panicking when you see the market moving a certain way. I want you to be able to pivot and then go another route. So essentially what we did was we came down, we got out here, and then the next thing we did, we played it to about 180 something. Now, Trap, why did that make sense? Well, because we have a demand zone right here. And the demand zone is clear, which means if it comes to this demand zone, it's going to shoot back up, which is essentially what's happening right now. Remember, if you look left, you know how to move right. So the demand zone comes off this candle right here. If it comes into here and it got close to it, now it always may not touch it. So what I did, before we got to 185, we probably got out at about 187-ish. Then we got out at 187, 188-ish, and we was good with that. So we got out probably about at the end of this. We got about right up in here somewhere, starting that candle. And then the rest came down, right? So what I really want to show y'all right now is watch how this comes together on another chart. Right? So remember I told you the 4-hour chart gives us more clarity, right? It gives us more structure. For the 4-hour chart, this is the same 2 candles have now turned into 3 candles. But watch this. So if you look on a 1 hour, right here at 183, we see the same thing right here, right? We get it right here. This is it. And once it crosses this area right here, that becomes your demand zone. And if you can look right across again, same spot. Same spot becomes the demand zone. So those things are combining on both charts. But let's see this again. You see your top, you see you hit here, you see you hit here. That's at 206 in the same zone, close to the 208. It's now correlating. So one of the things I love to do, if all 3 of my charts say the same thing, that becomes confirmation for me. So Same thing we did here. We saw a hit, and once it ripped, look right here, it rips past that body, right? Look at it. You got the green candle that goes up, which is the same green candle on this chart. That green candle that goes up here, mind you, this is the daily, this is the 4 hour. The same green candle that goes up here is that other candle, but it's broken into two. So once this red candle, this engulfing candle breaks that, we know sellers have now taken over. So the 1 hour gives us the dialogue. The 4 hour does the heavy communication. The 1 hour tells us where the emotion is looking at. And if you read this chart the same way, you can actually see it taking place right in front of our eyes. All right, so then what happens? Once it breaks, then you get a candle here and a candle here. We get right into our demand zone. Look, right back into the demand zone. Look, boom, this is your play. You get the spike up, that's it, demand zone. Came right back down into it, and as of right now, it's spiking back up. Now, I'm going to tell y'all a play I'm looking to add to the Patreon, and y'all can get in. But let's go a little further, right? We want to make sure it makes sense on every chart. Here's the same candle. You get it here, it drops back down. Watch this. You see the same two candles. Boom, boom. Watch this again. Once it breaks this candle, it goes in. Look at that. That looks crazy. Right? But once it breaks that, boom, it broke that body, engulfing. So now this red candle has taken that, and we got all of that. Right? Now, here's what happens. Now I'm going to show you where the 1 hour becomes the entry point. So right here at 184, inside of that demand zone, you see a hammer, which tells us a hammer at the bottom. A hammer candle at the bottom tells us a reversal is in play. There's hammer candles at the bottom. Next to that hammer candle, you see a doji, which means indecision. The next candle from the doji candle is an inducive move. So I'm going to tell you what's going to happen now. On this chart now, this becomes a new demand zone. From here, you get this down move, you get this hammer, you get this doji, and then you get this inducement like this, and now look where we at. Right? That makes sense to y'all? Engulf, down move, hammer, which signals reversal, doji, indecision. Even if the doji is red or green, it's indecision. You get an inducive move here, and then you get this right here. So let's make this make sense. So now here's what I want to walk to y'all on. I'm looking to get in this play. It done hit my demand zone. I want to see confirmation. Not only do I want it to hit the demand zone, but once it get in the demand zone, the next thing I want to do is confirm that it's going in the uptrend. So it bounces from this and gets to 192. So what do I want it to do? I wanted to overtake this red candle right here at almost 193. So it's like 192.70 something, right? Well, why does that make sense to me, Trap? Because now I can say it is overtaking these sellers, which means the buyers are now stepping back in. Remember, this game is always a dialogue between buyers and it's a dialogue between sellers. It's a fight between fear and it's a fight between greed. And if we can understand that, that will truly change the game for us. So watch this. What I want to see it do is I want it to hit to about 193. Well, Trap, what's the difference between 192 and 193? Remember, think about it as boundaries, right? I always say it's a hood. You know what I'm saying? So on that block, you good. But once you come to this block, so on the 92 block, you might see some safety. But if you can break the 93 block, you got action. Right? And so for me, what I want to see is, I want to see it, and that's why I wrote the 193 right there, not 195, right? But if it can break the 193, what happens is you come past the middle of this candle body, which is essential for me. Why is that essential, Trap? Because not only do you overtake this red candle, you now step up into this hood, into 193, and break those buyers that was over there. And so once you get into this candle, now you might don't take all of this engulfing candle at once. This is a good time you probably not. But you're going to be on a trajectory here to get us back to 208. Now, here's what I will say. You will see some resistance somewhere around the 200 mark. Why? Because 200 becomes a psychological hold number, right? And the market is based on numbers. So if you hit this 200 mark, so we can get into that 193, get that $7 uptrend of 200, get a slight pullback on 200 and bounce back up to 108, I think that's what'll happen. So I think we get in at 193. My goal is to make a November call. I'm gonna get in at 193. I'm gonna do a November call, 193 entry with a strike price of 200. That'll be the call. That's what I like. And I'm looking for resistance at 200. I'm looking for resistance at 200. I think the call to go up to 210 by November. I think we'll surpass that. That's what I'm looking for on this play right here. So I'm just giving y'all some game on what we're looking for. If things switch up, definitely come join the Patreon because we definitely gonna get busy. They'll know in real time when I'm doing this call, when I'm making this call. Of course, we're gonna look for some confirmation. If it bounces on here, we wanna make sure another green candle follows. We wanna make sure that it can bounce up a little more. Of course, it's earnings season right now, but that's my goal, man, to just show y'all some looks on the chart so y'all can see some things that I see. And so we can use all three time frames. Using the daily time frame is our entry, right? And if we go back to our daily time frame, I like to use the daily as sitting at my house. I won't go to this destination. I like to do the hourly time frame as this the airplane I'm gonna catch to get there. You know what I'm saying? So I won't go to Jamaica. I bet. Here's the airplane I'll catch to get to Jamaica and how I'll get in, what airport I'll get off at. And so if we look at it again, we see that 192. And then if we look at it real good, that 195 is here. We'll cross that body, but then the 193 will put us across this body right here. And 193 will put us right there on that body. That means we got room to grow. That's what I'm looking at, man. It's your boy, the Wallstreet Trapper, man. I hope you understand this in an easy to understand way. We're going to have more of these coming because people like trap. I like when you get on them charts. I can see it. I can understand it. It makes sense to me. So we got y'all, man. I love y'all. I appreciate y'all. Make sure you like. Make sure you subscribe. Make sure you send this video out to somebody that really want to learn a little bit more about the charts. That's why we zooming in on them so you can see the candle.